Global economic uncertainty and geopolitical tensions have posed significant challenges to economies worldwide. Yet, in the midst of this turbulence, Malaysia's economy grew by 5.3% in Q3 2024. This remarkable performance raises questions about the strategies employed to achieve such growth. In this video, we'll explore the strategies Malaysia used to achieve growth amidst global challenges. We'll examine the country's approach to tech sector innovations and fiscal policies, shedding light on the factors contributing to its economic resilience in a complex global landscape. But before we do so, please remember to hit that like and subscribe button. As a small channel, this support goes a long way. Now back to the video. Malaysia's tech exports surged by 37% year-over-year in Q3 2024, positioning the country as a significant player in the global tech arena. This growth stems from a foundation laid in the 1990s with the Multimedia Super Corridor Initiative, which aimed to transform Malaysia into a knowledge-based economy. Despite facing intense competition from other rapidly developing Asian countries, Malaysia implemented a comprehensive strategy to overcome these challenges. The government's approach included substantial investments in digital infrastructure, expansion of STEM programs in educational institutions, and targeted incentives for research and development. These efforts created a robust ecosystem that attracted both local and international tech companies. The global tech upcycle of 2023-2024 presented an opportunity that Malaysia was prepared to capitalize on. The country's strategic location, stable political environment, and business-friendly policies made it an attractive destination for tech companies looking to diversify their supply chains and expand their Asian operations. As a result, foreign direct investment in Malaysian tech companies increased by 45% in Q3 2024 compared to the previous year. The sector's growth significantly impacted Malaysia's overall economic performance, contributing 2.1 percentage points to the 5.3% GDP growth in Q3. One notable success story is Nexus Semiconductors, a homegrown company that secured a major contract to supply advanced chips to a leading global smartphone manufacturer. This achievement demonstrates Malaysia's capacity to compete at the highest levels of the tech industry. While the tech sector's success is remarkable, it's important to recognize that it occurred within a broader context of supportive government policies. These policies created an environment conducive to growth across various sectors, further fueling Malaysia's economic expansion. The next section will explore how these policies catalyze private investment, contributing to the country's overall economic resurgence. Private investment in Malaysia surged 18% in Q3 2024 compared to the previous year, thanks to targeted government policies attracting both domestic and foreign capital. A pivotal reform has been the liberalization of foreign exchange policies, allowing international financial institutions to issue ringgit-denominated debt securities and provide financing to local corporations. This measure revitalized domestic bond and Islamic securities markets, unlocking new opportunities for economic growth. Tax incentives aimed at the technology and manufacturing sectors have further boosted investment, spurring an influx of foreign direct capital. These sectors have witnessed significant expansion, with both new companies being established and existing businesses scaling up operations. However, reaching this point wasn't without challenges. Malaysia previously struggled to attract private capital due to global economic uncertainties and inconsistent domestic policies. Strategic reforms and stability measures introduced by the current government have addressed these issues, restoring investor confidence. The effects of these policies are evident in the technology sector, which has experienced a surge in both investment and job creation. For example, a multinational electronics manufacturer recently invested 2.5 billion ringgit in Penang, directly influenced by Malaysia's improved investment climate and generous incentives. This expansion is expected to create over 3,000 high-skilled jobs, showcasing the tangible benefits of government-led initiatives. Private investment contributed 1.8 percentage points to Malaysia's 5.3% GDP growth in Q3 2024, underscoring its critical role in economic expansion. Furthermore, the government's efforts to reduce the fiscal deficit reflect a long-term strategy for economic stability, encouraging sustained private sector engagement. These reforms have positioned government policy as a catalyst for private investment, directly fueling Malaysia's economic progress. Yet, these developments are intertwined with global dynamics, which also shape the nation's opportunities. The next section will delve into how international factors influence Malaysia's strategic positioning in the global marketplace. As global trade patterns shifted and geopolitical tensions reshaped supply chains, Malaysia emerged as a resilient economic force. The nation's strategic location and well-developed infrastructure positioned it as an attractive alternative to traditional manufacturing hubs, offering stability and efficiency in an uncertain world. The global economic landscape in Q3 2024 was characterized by a gradual recovery in external demand and positive spillovers from the global tech upcycle. This environment provided fertile ground for Malaysia's export sector to flourish. The ongoing trade tensions between major economies played a significant role in Malaysia's economic resurgence, as global investors began to view the country as a neutral haven. Malaysia's commitment to maintaining a non-aligned stance in international relations broadened its export footprint and enhanced trade opportunities. The impact of these global shifts on Malaysia's trade balance was substantial, with robust growth in both exports and imports indicating strong international demand for Malaysian goods and increased domestic economic activity. Certain industries benefited significantly from these global economic changes. The manufacturing sector, particularly in electrical and electronic products, saw a surge in demand. Additionally, petroleum and chemical products experienced notable growth, further diversifying Malaysia's export portfolio. The increased foreign direct investment, expanded trade opportunities, and strategic positioning in global supply chains all contributed to Malaysia's impressive economic performance. However, as the nation rides this wave of economic success, new challenges emerge on the horizon. One of the most pressing issues facing Malaysia is the management of its currency, the ringgit, amidst these rapid economic changes. The stability and strength of the ringgit play a crucial role in maintaining investor confidence and sustaining Malaysia's newfound economic momentum. How will Malaysia navigate the complex world of currency fluctuations while maintaining its competitive edge in the global marketplace? Currency stability often eludes emerging economies during global uncertainty. Yet, in Q3 2024, the Malaysian ringgit defied expectations, appreciating by 14.9% against the US dollar, while other regional currencies faltered. Its nominal effective exchange rate rose 9.9%, showcasing resilience amid a volatile global economic landscape. This exceptional performance reflects Malaysia's long-term approach to currency management, shaped by reforms following the Asian financial crisis of 1997-1998. These measures strengthened the financial system and laid the groundwork for the ringgit's current stability. In 2024, the ringgit rebounded from a 26-year low earlier in the year to become the only emerging Asian currency to strengthen against the dollar, despite policy uncertainties after the US elections. Bank Negara Malaysia, BNM, played a pivotal role, collaborating with the government to support the ringgit. Efforts included encouraging state-linked firms and private companies to repatriate overseas income, bolstering the currency and restoring investor confidence. Currency stability reduced risks for foreign investors, making Malaysia a more attractive destination for direct investment and supporting its overall economic growth. While a stronger currency can hinder export competitiveness, Malaysia's robust export performance in Q3 2024 indicated productivity gains that offset potential downsides. The ringgit stability was crucial to Malaysia's 5.3% GDP growth in Q3 2024, providing a stable financial environment that supported investment. As we turn to another key factor in Malaysia's economic success, the next section will explore the role of domestic consumption in driving growth during this period. Malaysia's private consumption grew by 4.8% in Q3 2024, reflecting significant economic activity despite moderating slightly from the previous quarter. This growth is supported by a stable job market, rising wages, and targeted government stimulus measures. However, The planned removal of subsidies on diesel, electricity, and chicken, as well as the end of a blanket transport fuel subsidy in mid-2025, is likely to impact household spending patterns and inflation in the coming years. The services sector, including wholesale and retail trade, transportation, and storage, was a standout performer, growing by 5.1% in Q3 2024. This growth highlights increased consumer spending and shifts in preferences, with e-commerce seeing rapid expansion. Accelerated by the pandemic, the ongoing shift toward online shopping has created new economic opportunities and bolstered Malaysia's resilient consumer economy. Higher disposable incomes have fueled spending on a range of goods and services, from essentials to luxury items, making domestic consumption a key contributor to Malaysia's 5.3% GDP growth in Q3 2024. This resilience in consumer spending underscores its crucial role in maintaining economic stability, even amid global uncertainties and rising global inflationary pressures. Looking forward, Malaysia's domestic consumption outlook remains optimistic but not without challenges. Subsidy reforms and their potential impact on inflation will play a pivotal role in shaping household spending. The government's ability to balance economic growth with fiscal prudence while maintaining consumer confidence will be critical in sustaining Malaysia's economic trajectory and meeting its long-term development goals. Malaysia's economic strategy for 2024 and beyond aims to sustain growth through quality investments and sectoral development. A significant Rp421 billion budget allocation underscores the government's focus on generating higher income jobs, enhancing public services, and improving infrastructure. These investments are vital for driving long-term economic growth and improving Malaysians' quality of life. Technology and manufacturing remain key growth drivers, leveraging the global tech upcycle and rising demand for manufactured goods. These industries are central to Malaysia's diversification strategy, reducing dependence on traditional sectors and positioning the country as a hub for high-value production and innovation. The government's focus on technological advancement and digital transformation highlights their role in boosting productivity, creating opportunities, and enhancing global competitiveness. Inflation management is a priority, with forecasts for 2025 indicating it will remain within a manageable range. This stability fosters economic growth, consumer confidence, and investment. Additionally, the government's commitment to fiscal responsibility, including plans to gradually reduce the fiscal deficit, reflects a balanced approach to growth and financial sustainability, ensuring investor confidence. Malaysia's recent success stems from a combination of sound policies, global economic trends, and domestic strengths. A thriving tech sector, strategic global positioning, currency stability, and strong domestic consumption provide a solid foundation for sustained growth. As Malaysia navigates global uncertainties, its ability to leverage these strengths will be critical in shaping its economic future. In conclusion, Malaysia's economic growth in the third quarter of 2024 was driven by a thriving tech sector, effective government policies, global economic shifts, currency stability, and robust domestic consumption, highlighting the nation's ability to adapt its strategies in an evolving global landscape. Positioned as a model of economic resilience, Malaysia is set to expand its influence in Southeast Asia, with a focus on technological advancement, fiscal prudence, and initiatives like digital infrastructure expansion and green technology hubs. These efforts not only strengthen Malaysia's economic standing, but also attract foreign investment and foster regional partnerships. As Malaysia continues to leverage its strengths, it is poised to shape regional economic dynamics, contributing to trade evolution and technological adoption across Southeast Asia. If you found this video insightful, don't forget to like and subscribe for the latest updates on geopolitics and global economics. Thanks for watching.